Now we're talking. Back to work. Hope you guys had a great weekend. Hope a good Monday trading session. It's Monday evening. We're getting ready for Tuesday's trading session. Got a lot of great trades setting up for tomorrow's trading session. I'm going to cover all my favorite trades in tonight's video. That way you have a game plan to make some money on Tuesday. As always, though, before we jump in and get this party going, got a lot to cover here tonight. You better subscribe to our YouTube channel. Make sure you subscribe so you don't miss tomorrow night's video upload. And as always, I appreciate you guys tuning in every evening, even though a little bit late here tonight. Thanks for sticking around. If you enjoy the video, hit that like button for me. Appreciate you guys sticking around tonight. But enough of the intro, though. Let's get ready for Tuesday. Tuesday is not going to trade itself. Where's the money on Tuesday going to be here? Well, boy, you can definitely see there's a lot of ranges on these charts, right? Range on the Nasdaq, range on the S&P, range on the crude oil. If you know me, you know how much I love range-bound markets. We're buying low, we're selling high, we're trading breakouts. Got a lot we're going to cover here tonight on this video. Now, again, I'm going to go over all my favorite trades throughout the video tonight. Normally, I would check the news for tomorrow, but there really isn't any major news until Thursday. So be aware, not a lot of news, no Fed speakers until we get later on in the week. So don't worry too much about any of the news in the schedule for tomorrow, really, or Wednesday. Thursday and Friday will be the big news days. Now, I'm going to go over each one of these charts here for tonight. Nasdaq, S&P, and crude oil. Whether you trade one of these markets or you trade all of these markets, like we do in our trade room, you're going to learn something new throughout the entire video. There'll be learning opportunities. There'll be earning opportunities throughout the entire video here tonight. So make sure you stick around for the whole entire thing. I'm going to make it worth your time, and I'll save the best for last here tonight. So don't click off here just too soon here on this video. All right, let's get right into it though. Nasdaq first, S&P, and then we'll wrap up tonight on the oil. Where's the money tomorrow here on the Nasdaq? Well, first of all, what are the most important kind of clues that we're going into Tuesday's trading session? The first clue is we have two ranges. There's a range above. This is a bullish move into a range, and then of course a bearish move into a trading range. Now, why is that an important clue? Well, because usually when there's a bull range and then a bear range, or vice versa, think of this now almost like one big trading range, and the market will usually try to rotate back and forth from basically one extreme to the next. So if you know kind of how that personality is, the best trades in a situation like this will be trading the edges and then trading the rotation back and forth. That's one very big part of this. And then to kind of add to that, those two different ranges on this chart, the second piece of this is if you look left, if you zoom out a little bit further on this, you'll notice right away here, we're pretty much right at the, kind of the low of what really is one big trading range after that Memorial Day holiday, right? That's the end of the month of May. And we pretty much have been kind of bouncing around back and forth from top to bottom of this range. So as you can see, those are really the two kind of main components on this chart, and they really tell us, for the most part, the same basic stuff, right? They tell us that, really until we see a good significant breakout, the best money trades are going to be buying off the low, using this range as a magnet, right? Selling off the high, using this range middle as the magnet, and of course, trading that rotation, right? Trading the rotation back and forth. So I'll show you here right now kind of what I'm looking for here, and then of course we'll do it together tomorrow morning in our trade room, opening up at 8 o'clock Eastern time. What we really want on this, what would really be probably the two probably best, for example, long trades right now, right? As we come off the rotation off of that low, we're bearish, right? This is not a bullish market at this point. We're still bearish here, but the idea would be grabbing it either off of that low or grabbing it as it breaks through some of these areas of resistance. How do we do that? let's talk about going lower here first. If we can take out this low, which would really be nice down here because that, of course, is a relatively strong move down, we'd like to have them take out that low. Even better would be to really take out that pendulum swing level. Really, it could be here, it could be here. It doesn't really matter to me which of these levels that we take out. What I want to do, though, is get underneath this trading range, right? The range itself is the magnet. And so I want to get underneath that trading range. Then, knowing where we are in that kind of big picture range I just showed you, now we want to try to trap in some of the sellers who are not quite aware of their surroundings. Now, we saw a good example of back here where the market ran lower. The bears tried once, the bears tried twice, and then back up. We call these failure setups. This is a 2-try failure. And it's a great example of what I'd like to get as we go lower here. So we run lower, we take out that low. I want to see those bears try once, try twice. Now, why twice? Well, because again, we're a bear market right now. I realize we're at a major area of support, but we're still in a bear market. Now, once we get those bears trying twice, now we know exactly where their stops are. And those stop losses will be fuel for that reversal off of the low. We call these 2-try failures. I'll oftentimes draw a trend line off those higher lows, look for a trap off that low. But the idea is pretty simple. We're hunting for stops, using those stops as basically fuel to run this market going higher. Now, at that point, your job really is just getting good now, because now as the market rolls higher, what I love to do is now find a new channel off of that high, draw it down off that low. And one of my favorite follow-up trades is what we call a first test trap. You're just below a prior swing, and again, we're drawing a new trend line off that high, and finding an entry off of that low. And again, it could be really any of these levels down here. I want to make that very, very clear, right? It's not need to go all the way to that pendulum swing in my eyes. That'd be very nice, though, to take out that pendulum, the amount above, the amount below. Bears try twice, looking for that 2-try failure, and then we trade the rotation. Where does the buyers want to go? They definitely want to take out that high, right? 680 high, and they want to go back up and bury that 12,800 high from earlier on here today. Now, as we go lower, at what point could I start thinking about breakouts down here? There are definitely some breakout opportunities here on this, and you can see there's a big range down here as well. So I'm definitely not afraid of selling short if we go lower. Why don't we cover the breakouts a little bit later on in this video, right? Let's cover the rest of this here right now, and then we can go grab a look at breakouts here on the S&P, because the S&P is very, very similar here to the Nasdaq. So we know how to trade this now. We know how to do this now. If I get this thing to work here for me, if we go lower, okay? What if we go higher? The pattern that they're really the two patterns that you want to look for as we're going higher here is that pop and grind. The pop and grind breakout is the one you want to look at for this one. These are the two I would definitely be looking for most here for tomorrow. One is that pop up. And then instead of a pullback to the moving average and jump for a 1, 2, 3 reversal, I would expect, because this market had that bullish run and then that pullback, I would imagine we're going to see a little bit of a short squeeze as the market goes higher here. And that short squeeze is what causes the grinder here. So watch for that pop up and that grind off the high, then mark up that high, bring it down to that low. And one of my favorite entries is always get underneath a prior swing, get underneath the moving average, little trap going on, little failure pattern going on, little pullback setup right off of that low. Does that make sense? So if we kind of pop up here overnight and we start to grind going higher, don't go looking for a bigger channel like that. Draw that trend line, rep those highs, and then find that. I always go in and look left and find some swings for traps, for failures, and then I love to grab that first pullback as we go. We know where the market wants to go at that point, right? It wants to go back up and retest those highs. Now, I'm getting a lot of questions right now from you guys in the comments about the traps, the failures, the pullbacks. So if you're watching for the first time right now, if you haven't taken the free trading course yet to learn all the setups, I know most of you guys and gals have already done so, because I'm just always amazed how many emails I get every week right now. People who are using the free course, the traps, the failures, making money on your own, not even with me yet in the trade room. But listen, if you're here for the first time, if you haven't taken that free trading course and learned all the setups, I'll put a little link up here for you in the upper right-hand corner. Definitely grab that link, right? That will take you to the website, and you can learn the entire roadmap that we use in our trade room. If you're like me and you hate missing the best trades each day, or you're taking too many losses, or you're making too many mental mistakes, or maybe you're trying to transition from a full-time job to full-time trading, the roadmap that I teach in that free trading course will get you on the right track and get you start taking some of the right trades each day, even on your own out there without being with us in our trade room. So definitely grab that link. Got a bunch of examples of these setups in there as well. So definitely grab that link there. You're going to love that free trading course. Now, by now, maybe you're wondering, well, wait a second, Joe. If this is a trading range, why can I sell up here? We can definitely sell up there. What's the problem, though? The problem is going to be, really a couple things. First of all, it's a bear market into a trading range. So we should be finishing off that rotation, right? The amount we go above the range is the amount we should be going. We should be finishing off that rotation. So if the market takes a run higher here, right away, that should be a really big red flag that something really has changed, right? We're obviously not as bearish anymore, and that would kind of lead into the idea of this being one big trading range. The thing also, too, is if you go higher here, now we have a rising support trend line. So the only way you can and this is, again, it's going to be a little bit easier to be a buyer on this. Doesn't mean you can't sell it, but in order for me to want to sell this market, I'm going to have to work around that trend line, but most importantly though, I have to deal with what is probably going to be a lot of buyers coming in here, right? Trying to run this thing just like I'm talking about back to these highs here. So, let those buyers try once, let them try twice, and then what you want is a trap. Okay, the trap is really one of the most important parts of this. Why? Because that rising support trend line. Right? That rising support trend line is it's a big part of this. Okay, so that's the reason why, again, the fact that we got failed rotation tells me let them try twice. The trap is really important for me here right now because of that, again, because of that rising support trend line. That doesn't look like a very likely setup, but again, it's definitely possible because of this bear market into a trading range. All right, so now we kind of know how this will work. Now, we haven't talked about everything yet. Okay, there's a few more breakouts going higher here. There's also some breakouts going lower. Why don't we keep moving this thing over here now? Let's grab a look at the S&P 500. The S&P is very, very similar here to the Nasdaq here tonight. There are two ranges on this chart. There is the bullish market into a trading range and a bear move into a trading range. Again, these are very, very big clues. They're not very common, but what you'll notice is whenever we've got multiple ranges, one there and one there, again, the market will kind of think of it as one big range, and they'll try to rotate back and forth. So knowing that is the case, right, the money is made buying off of these lows, selling off of these highs, and then, of course, trading that rotation, right, back and forth. So we'll talk a little more about that here, a little more different detail here on the S&P. A lot of this is, again, very, very similar. As we go lower, and again, we're also on the S&P at the low of one big, kind of post-holiday range, right? That was that big run up. This is basically one big trading range. And you can see the market rotating back and forth as we go. So again, we have to assume the big money, the smart money, are looking to pick off the bottoms and buy low, looking to sell off the high. And again, eventually we will see a breakout. And once that happens, we'll simply trade the new trend that we get. But until that time happens, though, we really want to kind of err on the side of caution and buy low and sell high. Now, just like on the Nasdaq here, if we do go lower, if we do go lower here, I still really like, again, that same kind of idea here of going lower, taking out some of these prior lows. Again, a lot of support levels down here, but I'm not really interested in selling down here. You know what I mean? We want to see those bears come in, let them try once, let them try twice, use all those stops as fuel, and then, of course, once we get that nice juicy signal candle there, we can buy into stops with what I call a failure. And then as we're going higher, this is, again, I think this is one of the best setups for tomorrow, is to find that new trend line, find a new channel, look left, look for those little swings down there. It's amazing how those little swings will come right back up, and buyers will come in and just hit it off the low of that channel. That is the same exact thing we just talked about on the Nasdaq. I also think, too, that if we can break down here, there's another level right below us. So there probably is some money to make on the way down. This also applies to the Nasdaq as well. What type of breakout pattern could I use going lower? There pretty much are two types of breakouts going lower. One is that pop and grind breakout that we talked about before. Mark off that low, mark off that high, find those traps. And remember, keep in mind, guys, I say traps here. You know, I say traps, but oftentimes there isn't a trap right there. So at the very least, I want to draw the channel off the lows, get up around that high, and if for some reason I don't have a trap to use, I can use simply a buyer coming in trying to buy that pullback, and I can sell right into those stop losses for a failure. Again, oftentimes failure into pullback combination, right? Makes sense? And again, you're going to learn all the rules. You'll see a lot more examples of traps and failures and pullback setups inside of that free trading course. I go over a lot more of the roadmap you want to use to find the right areas on that, right? So definitely grab that as we go. One thing you want to keep in mind on a breakout going lower like this is the size of that breakout leg is oftentimes the size of that third leg. Okay, keep that in the back of your mind because we get a couple more of those a little bit later on oil here tonight, right? The size of the first leg is oftentimes the size of the third leg of that trend going down. There's one more breakout pattern I'd like to use on this, and that would be a 1-2-3 breakout. Now, a 1-2-3 breakout's really, really simple. When I take out that low, the bears now will come in and hold the pullback, and they're going to jump off the moving average. Right? You want to see what a 1-2-3 breakout looks like? That's it right there, right? There's a trading range. There is a 1-2 jump, right? That, my friends, is a 1-2-3 breakout. So what do? You mark off that low, you mark off those highs, and you sell the first test. Okay? Very easy example right there. So think about that same idea, that same idea down here. Okay, it may not go forever, just so you know, right? Because again, we do have another major bottom down here at that 40.71.5, right? And again, all this can also be applied to the Nasdaq as well. So if I can get that market now to push lower, and they pull back. Now, remember, if the bears try a couple times and fail, that's a buy, right? That's a big-time failure. You can see an example of it right there, right? It's a big-time failure, so you know the game plan on that. But if the bears can come in, if they can hold that pullback and really jump off that moving average, now go out, find those lows, find those highs, find those traps. And again, I like traps, but they're not always going to be traps, right? Could be a trap, failure, pullback combo. We kind of know where that next major level is. But at the same time, remember, an easy way to kind of fine-tune these exits, first leg, third leg, is oftentimes the symmetrical leg. Now, what do you think? What do you think the possibility is here for the E-minis to make that 1-2-3 move down, to get that channel, to get that retest? And then what do you think? Is it possible down here we could go 1, 2, and then light that thing up going? Absolutely. That would even be better, right? I can't think of a better scenario than that tomorrow. Okay, I probably could think of better for a few minutes here, right? But again, 1-2-3 breakout, hit that first test of that channel, And again, I'm not going into all the details of the entry setups. You'll learn that in the free course. There's a lot of examples in there of how we do that in our trade room. And then, of course, again, we know there's one big range up here, right? And we know where we are. So now get those bears to try a couple times, right? Let them dig their own grave. And then once we get that stop run, it's a 2-try failure. We then grab that new channel. And again, could be a trap, could be a failure, could be a pullback combo. And where are we trying to go at that point? Oh, you know where they want to go at that point. They want to start taking out some of these prior highs. That's an objective at that 41.39. Obviously, the big top is a big objective as well. All right, guys, so watch those breakouts down here. Do not be afraid. If a nice big breakout, grab that short and then hit it. Right? Don't reverse your position. I never recommend. I'll tell you right now, if you get in the habit of hitting the reversal key or the reversal button, we're not reversing our positions. Usually when you reverse your position, that usually is not a very good sign there, right? Take your profit at the right spot and then wait for the next entry signal going long. And if you don't know what a good signal looks like, don't forget, we'll be in our trade room tomorrow, 8 o'clock Eastern time, and we're going to do it all together. It's a great place to learn and trade along. Now, as we go higher here, okay, we talked about that move up 1, 2, back down again, right, on the Nasdaq. That is very much still in play here right now. We talk about the pop and the grind, right? That's one of my favorite channels here, or kind of reversals for tomorrow. I love that setup in this situation because, again, it'll be a lot of a short squeeze, right? It'll potentially really grind as it goes higher. I also think that a 2-try breakout could be on your radar here for tomorrow as well, and that is a real strong move, a shallow pullback to the moving average, a higher high in price, and then, of course, a trap setup. One of my favorites. And again, in this situation, that's a very useful tool because, again, if this thing does pop up here, I can almost imagine everybody who sold this market, as it was going lower, they're going to see the writing on the wall. They're going to see that big range and they're going to get the heck out of the way. That'll create that shallow pullback. The higher high confirms the move, and then we have our trap set up. And again, we know where the market wants to go. It wants to take out that high. Now, one thing about as we go back to these highs here, if we do go back to these highs, keep in mind kind of the big picture of where we are right now, right? Keep that in mind. So you have to think this area here, it's not bulletproof, but it's definitely going to be a solid level of resistance. And we have, of course, more weighting up over here. So what I want you to kind of keep in mind on this, and again, this directly applies to the Nasdaq as well. If we do get that pop and grind, right, as we go higher, we get that pullback, get that trap or whatever entry we used them on the trade room. When we get that pullback, right, they're going to want to retest the high. Okay, this is where you think, okay, do we break out going higher? Or do now the buyers start to churn things up and exhaust? 1, 2, and again, why 2? Why 2? Because it's a bull market at that point, right? We can't get in the habit of picking tops and bottoms. We have to wait for signs of exhaustion. The key to a good reversal is not some indicator signal. It's finding a good location, a good turning point. It's waiting for signs of exhaustion, which is kind of my way of using a 2-try rule. We use in this, right? And then using some fuel, right? We need some sort of catalyst. And so the catalyst is running these stops. Okay, that's the way, at least in my eyes, that's the way you consistently predict reversals or consistently profit from reversals. You know what I'm saying? We don't just simply pick tops and bottoms because the tops and bottoms are there. We look for areas where we want to be looking for reversals. We wait for signs of exhaustion, and then we put ourselves in the shoes of the other traders in the market, and we think, okay, if I was a buyer right now, where would my exit be? Where would my pain point be? And that's exactly where now we want to be looking for that short going back down. And then again, remember, your job is not done yet. Now the bears want to come in and they want to go all the way back down again, right? Assuming there's nothing in our way here at that point. Now we go out, we mark up a new channel off that low, we find that new trend line off the high, and we drill down and we grab that short off the high there. Right? I hope that makes sense. It's the same basic idea up here as it is over here. And I just want to kind of remind you too, if we go up, pull back, and break out, Now it's the same idea, right? Now we're finding new channels there. We just widen the whole process out, right? So if we do get that, for example, if we get that pop up and that grind here, we find that channel, we get that pullback. Yes, I do want to look for that 1, 2, and then dump it back down again, as we talked about. But if it keeps on going, right? If it keeps on going, it could easily keep going into a pop and grind, right? It could go right into another pop and grind, mark off that high, mark off that low. You see what I'm saying? Right? Remember, we have another level up there, right? But again, if this thing pushes right through that high and gives you another one of those breakout patterns, then by all means, buying off that low is a very reliable setup. And again, it may not go forever, but it's probably going to retest that high. And then from there, it's the 1, the 2, and the reversal setup we've talked about already. So keep an eye on that if it goes higher. Remember, really the big high up here, 42.02, 41.88. There's just enough space above this area to get a few more entries as we go higher. And then who knows, right? Maybe we get a chance to dump this thing back into that range here at some point here tomorrow. One last thing about the S&P and the Nasdaq is always, when there's a range on here, stay out of the middle, right? Stay out of the middle. And then also, too, keep in mind, too, we're looking at rollover on the Emini and the Nasdaq later on this week. All right, guys, so got a pretty straightforward game plan, the Nasdaq and the S&P. Again, it's a little bit more advanced, but I think the way I explained it tonight, though, hopefully it kind of makes more sense here for you, how to trade that stuff. And again, tomorrow we'll do it together in our trade room. Last up here on the crude oil. Oil has been, let's go over it, right? There are three basic components here to this chart. One of them is that strong move higher that we saw to finish off last week, right? That strong move higher was the rumor was the kind of unlocking of some of the major cities like Shanghai in China, along with combining the recent kind of speculation of banning the Russian oil exports, right, or imports, right? So that was kind of the rumor of what led to that big run higher. Why is that important? Well, because anytime we see a real strong move in one direction, we always know there's a good chance we'll see a relatively deep pullback and a retest of that level. That's one really big clue on this. And what that really does to this whole area here, this move today, is it makes it feel like one big flag. We had that big pop up last Friday, and today kind of just dribbles lower. The market didn't really reverse. It just kind of dribbled lower slowly. If you've read any of the classic, technical analysis books, this is a bull flag, right? That's a bull flag. And we know the buyers right now, the reason why bull flags exist is they're trying to buy it at a lower price, right? The prices simply went too far, too fast, and now it's trying to kind of pull back low enough to get the buyers to come in and want to pop this thing running higher, right? That's all a bull flag is. Bull flags are simply a market that went too far, too fast initially, and now they're trying to find an acceptable price that's not as high as it was right last Friday. That is one really big part of this, right? And it kind of makes sense when you think about it, because if the bears got this breakout, why wouldn't they have buried this thing? Why wouldn't we have gone all the way back to that 115 level down there, right? Big round number. So it smells like a bull flag right now. Second big thing is that we've got multiple support levels below us. Okay, now what I'm talking about here is you'll notice we've got one leg, measured move, two leg, three leg. Remember I said earlier that trends love threes, where the first leg and the third leg are usually very symmetrical? That's a really good example of that right there, right? There's one leg off the high, right? Two middle leg, the middle leg's the oddball, and then of course your third leg is almost always the symmetrical leg. Okay, that's one really, really big important clue. If this is a bull flag, as I'm describing it, then a three-legged pullback would sure be a good time to be looking for a long, right? I think that's a good clue here. The next one is, it's also very, very important, is there was a range right there to begin today. Now, we've talked about this a couple times already, but whenever we have a range, the amount we go above the range is oftentimes the amount we go below the range. And so sure enough, this area now is seen as, you can see for yourself, right? The sellers had a hell of a time getting through this area, right? So you can tell we have quite a bit of support levels right now underneath a trading range, and ranges, right, are magnets. Okay, now there's one more thing about this which we do have to kind of keep in mind here, and that is, as I mentioned before, we do have a range below us, and it's not some tiny range. It's actually a pretty big range down here, right around that, 115 or 116. Now, think about what we just talked about on the S&P and the Nasdaq. In all reality, this could easily be nothing more than that same scenario. It's a bull market. There's your trading range. Look at this too. The amount we go below is the amount we go above, right? So the point I want to make on this is even though it looks like buyers want to gear up for another run back higher right now, you got to think, boy, if the buyers don't get their way, if the buyers fail on this, if the bears, I don't know what's going to happen overnight. Oil is a very kind of news headline driven market right now. Anything is possible in Asia and Europe coming into the U.S. session tomorrow morning. This could easily dump. And where do you think it wants to go? It wants to go back to that, I would imagine, where the low of that range is. Just so we have the big range on the S&P and the Nasdaq, and we're trying to trade that rotation back and forth. This is very similar to that here on the crude oil. Really making our job easy here tonight on this video. Thankfully too, because I was very late to getting the recording out. I really appreciate you guys hanging around with me here. So what do we do with this? Well, a lot of this is very similar. We talked about on the S&P and the Nasdaq. That's the good thing about this, right? So now, if we do go lower here, we take out those lows. Again, I've got the pendulum swing above, pendulum swing below, right? It could be here, it could be here. Ideally, really ideally, if I want to be a buyer, I want to take out that low. That would really be kind of the ideal spot. If we could take out that low and then start to get those bears to come in and get the 1, the 2, right? Again, it's a major turning point, but because for the most part we're bearish right now, I realize the longer term trend is very bullish right now, but I'm a day trader. I'm a short term trader. So for me, the short term momentum is the most important part, because if you respect the short-term momentum, like with this 2-try failure, you'll be able to use smaller stops and be much more precise with your entry, right? It's tough to predict a bottom with a small, tight stop. You know what I mean? Because, again, you're going against that momentum. So anyways, long story short, once those bears try twice at a major turning point with a range overhead, in what feels like possibly just a deep pullback after last Friday's move, now, of course, we can get those stops getting hit. I can look for that 2-try failure. And then again, as we go higher, I can grab my new channel off that high, off that low, and I can grab that first test, because after all, the first test is the best test, right? Like that combination trade. And again, where does the market want to go? It definitely wants to take out this high. Right? That's the big bullseye high, right? There's a little gap up there, right, coming out of Asia. And then we know where they really want to go. They want to go back up and bury that 121, right? They missed it by a point there. 121.35 is the next big objective above that. And then from there, we really go up pretty quickly there to 124.15. And then that big high at 126, right, 26. So as we go lower, that's where that 1-2 up, find that channel, right, and hit it, goes from there. Or do we break down, right? Do we break down? This is a definite possibility here for tomorrow. Again, think about that 115 area down there we mentioned in the bigger picture. At this point, it's very similar to what we talked about before, right? Take out that low. Can the bears, can they hold? Let me just get rid of this channel here for us real quickly, because it's not really that important for this part of it, right? But if I can take out that low, the bears come in and they hold that pullback and they jump, right? They blast right on through that low. Now we know where the market wants to go. It wants to go back to that 15 low. Mark off that low, mark off that high. Again, I always like to go out and look for trap levels. You'll learn about this in the video course I mentioned earlier. Get above that moving average, at the very least, trap, failure, pullback. And again, think about it. First leg, third leg, that will give you more of a fine-tuned exit on that as we go. I would also think too, a pop and grind would definitely be something to keep on your radar. Mark that low, mark that high, right? Get those things up. Again, same idea, right? We're finding different ways to draw that channel, because when the market's trending like that, trends love to use channels. And it's how you draw the channels in different types of situations. You're going to see a lot of examples of that in that free trading course, right? Okay, that's pretty easy there. Now, as we go higher, right? As we go higher here, it's very difficult to justify being a seller on this right now. If we do not roll lower and the market now tries going higher, it's very difficult to want to sell this, because again, you're going to have that trend line coming up. You'll have to get up and get a trap. This will be a very uncomfortable, I want to repeat this, anything is possible, but we have to be a little more selective as far as which trades, the ones we want to take and which ones we don't. We talk about in our trade room, just wait for the low hanging fruit. Just because it's a setup pattern doesn't mean you're going to take it, right? If you spend all your bullets on trades like this one, right? If you spend all your bullets on trades like this one, you're not going to have the capital left, because a lot of those will fail on you and you'll miss the better trades of the move here. Again, like on the S&P, if we can pop and begin to grind, right, going higher here, I like that pop and grind channel. Again, why? Because we know where the market wants to go at that point. We know that big push up. We know they want to take out those highs, right? And so that makes a lot of sense there. Again, if we can pop and start to grind higher, makes a lot of sense there, right, for that first pullback. I also think too, that a pop-up strong move, a shallow pullback, and a higher high in price would also be again, we call these 2-try breakouts or a 2-try trap. Okay, these are great as well. That's a really important trap, because you're not going to want to buy up into those big highs. And if for some reason the market pops up, we hold that pullback and we just jump, right? This could easily happen. Again, news is everything to oil right now. If we see a big headline overnight, market gets spooked, it starts ripping, going higher. We know where those levels are. I mentioned earlier, we go out, there's your 1, 2, 3 break. Remember though, it really needs to push and clear to that big top. All right, really, really important it does that. Okay, if I get something like this where it's like 1, 2, that's not going to be enough. Okay, that's more inclined to be a 1, 2 failure and dump it back down into that trading range, right? We've talked about that setup quite a few times already. Okay, so they've really got to pop this thing up. They have to hold that pullback and really blast, right? It's really going to be a strong blast going higher, because then we have a big, strong move. And anytime we see a strong move in one direction, we can almost guarantee we'll get that pullback. And it may not go forever, but it will retest that high. And so we grab that pullback, right? Make sure the bulk of the position off at that high. If it keeps going through the high, wonderful, we'll keep on trading it. But if at that point now they retest the high, moving average comes over, bulls try. Again, we're at a major turning point with signs of exhaustion. Think about where those stops are, right? And run those stops, right? That's a really nice setup there, going back down from there. All right, guys. Hopefully by now you can see a bit of a game plan here for tomorrow. And remember, speaking of tomorrow, we're just simply prepping this stuff up tonight, right? Tomorrow is where all the fun stuff happens. We're going to get together tomorrow morning in the trade room. And I'll tell you, if you're looking for a great place to learn and trade along, if you're tired of missing the best trades, or you're sick of putting more money in your account because you keep blowing it all on losses, I've been in your shoes before. My trade room is designed for new traders to come in at day one, start following right along and trading right along. Or maybe you're an experienced trader, and you know a lot about the markets, but you haven't quite been able to get the pieces to line up yet. I'll tell you right now, if you're an experienced trader, you'll have an even easier job with me in the trade room because you already have that knowledge. I'll just simply show you how to put the right pieces in the right direction, and I'm going to hold you accountable to make sure you're not making those mental mistakes anymore as well. All right, guys, I'll put all the membership links, all the free course links, I'll put all that right below this video tonight, either on the website or the description of the YouTube video. Don't be afraid to call the office too. I'm always here to help out, so don't be afraid to call the office if you guys have any questions. That toll-free phone number there will be an easy way to call me here in the office. We also have live chat as well, so don't be afraid to use that live chat tool, and we can chat back and forth there, and it can help with answering any questions or hopefully help get you registered as a new student, and we can trade together every morning at the opening bell. All right, last but not least here, thank you so much for sticking around tonight. I was a little bit late to the video here tonight, but you know me. I can't leave you guys hanging, though. I want to make sure my crew is ready for tomorrow. So if we don't see you tomorrow morning at the opening bell, kick some butt tomorrow. Got a good game plan for tomorrow. Hopefully I'll see you there at 8 o'clock Eastern time in our trade room. We can trade together here. My name is Joseph. As always, be well, be nice to each other, and you better be here next time. Adios, amigos. Bye-bye for now.